We've got 4 minutes left of trade time for the closing countdown. The Nasdaq is in record closing high territory. Let's trade the close with Shawn Cruz from TD Ameritrade. What's the takeaway today, Shawn? Do you think the market is now certain it will get its rate cut and moving forward that the Fed will be there to support it?
I think
what may?
That's really the big takeaway here. Basically, the entire move that we saw play out July 5th after that jobs report, we've almost seen that reverse. We're getting gold higher today. You're also seeing the dollar back off a little bit, and you're seeing some of those growth sectors like the Nasdaq move significantly higher, especially the semiconductors. So it looks like, one, markets are pricing in essentially the certainty of a rate cut here in July, but they're also pricing in 50 basis points by the end of September, and that may be 50 in July, or it could be 25 in July and then 25 more in September. But you're starting to see that get priced in a much more dovish Fed.
Absolutely. Shawn Cruz, thank you. Let's go back to Mike Santoli for his third dashboard, complaining about millennials. Mike.
Oh, not complaining, appreciating them, Sarah. As you know, nap time, it might be coming if you look at the VIX. VIX is being held up into today by that Powell testimony. A little bit of suspense over what he might have to say. Down basically a full point today. 13 shows you it's relatively mild summer trading with the equity indexes at their highs. Makes sense. Take a look at the projection of what the volatility market might look like over the next month or so, next several weeks, by time slice. This is the nap time I'm talking about. Basically, volatility futures are suggesting, this is from Wells Fargo, that perhaps things calm down, especially because earnings season starts. Stocks go their own ways. The indexes get trapped. But look at this. That's the Fed meeting. It's implying a little bit of potential for some fireworks to pop one way or the other. But that makes sense as well. But until then, maybe you got a stable market at the highs here, guys. Let's go over to Rick Santelli with the bond market report.
Thanks, Mike. All you need to do is look at the short end. Two-year note yields dropped almost 10 basis points today as Jay Powell did not push back on what the market's expecting. Eases. Look at how it steepened the curve. Yesterday we were around 16, now 24 basis points, 10s minus 2s. The dollar index didn't fare well. It was one of the early warning signs. And something else occurred this morning. Boons were auctioned. You know what investors get? Zero coupon boons. And they happen to close at minus 30, the highest yield in almost 2 weeks. Bertha, how's the Nasdaq trading?
Pretty strong, Rick. We saw the Nasdaq go over 8,200 today for a record high. Looks we're on pace to close on record. It's not the FANG names. I'm calling them FAMA. That is fame in Spanish. And it's Facebook, Amazon, Microsoft, and Apple that have really been driving this. They're what's driving it today. They're the heavyweights providing the biggest lift, although not necessarily the biggest gainers. Chip stocks as well, very strong. Have seen a strong recovery after getting beaten down. They are up 1% for the week and 1% on the day. Bob, over to you.
3,000 on an intraday basis for the S&P 500, not closing there, but we could have used some help from the industrials. Caterpillar, they sold right into the rally, Boeing, 3M, and the shippers, UPS, and all the other ones to the downside. Other than the FANG names that have led us from 2,000 to 3,000, that's happened in the last 5 years. Really, it's been some fintech names. Your Visas and MasterCards have had big moves to the upside, almost 200%. United Health, a couple of other big names.